What is the price prediction? Well, it's $9,044 per ounce today. However, the U.S. probably wants a little bit of runway here. We do deficit spending every single year, and it's already baked into the cake for this year and next. And so if they just add a little bit to this, you come up with a nice round number. When you make a price prediction and a time prediction, you are almost always going to be wrong. But I'm going out on a limb here and saying $10,000 per ounce, and it's probably going to be sometime this year.
Data released by the U.S. Treasury Department revealed a federal budget deficit of $1.307 trillion for the first 6 months of fiscal year 2025, covering October through March. This marks the second highest year-to-date deficit, surpassed only by the $1.706 trillion shortfall recorded during the same period in fiscal 2021. The persistent deficit underscores a structural issue within U.S. fiscal policy that relies heavily on continued borrowing and spending, with no near-term plans for reversal. MikeMaloney of goldsilver.com believes the current fiscal trajectory could significantly reevaluate gold, potentially reaching $10,000 per ounce if the U.S. returns to a gold-backed monetary system. He acknowledges the uncertainty of such predictions. Recently, gold has experienced its third major rally in as many weeks, driven by concerns over fiscal instability and currency debasement. This surge began with Asian markets on Monday, with spot gold hitting an all-time high of $3,413.84 per ounce, up nearly 3% in a single day. Key resistance levels have been unable to halt gold's bullish momentum. Maloney highlights that if the monetary system shifts to a gold standard, it's important to note that the U.S. has the most significant official gold reserves. While the data may be from 2022 and not fully current, central bank gold holdings generally change slowly, except in China's case. In recent years, China has been actively increasing its gold reserves to lessen its reliance on the U.S. dollar. This movement isn't isolated. Central banks globally have ramped up their gold purchases as confidence in fiat currencies, particularly the U.S. dollar, and wanes. The Reserve Bank emerged as the second largest buyer of gold in early 2025, acquiring 2.8 tons in January and February alone. This follows a robust accumulation of 72.6 tons throughout 2024, bringing the total reserves to an impressive 879 tons. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop.
Now, if we do go back on some sort of gold standard, the U.S. does have the most gold of any country on the planet. So we put these graphs together for my book. So this data goes back to 2022. So it's not exactly accurate, but it's very, very close. The amount of gold in the central banks doesn't change that rapidly, with the exception of China. But you can see which countries here. This is the top 20 countries. However, that doesn't say how rich a country will be if we go back onto a gold standard. If you have a country that has 10 people with 10 ounces of gold in that country, and then you have a country that has 1,000 people with 100 ounces of gold in that country has 10 times more gold in it, but the country with only 10 people is actually 10 times richer per person. And so when we were writing Great Gold and Silver Rush of the 21st Century, Alan came up with this data, and so it's the number of gold ounces per person. And Switzerland will, if the United States does this and we go on a new global monetary system, Switzerland will be the richest country on the planet per person. And then the U.S. will actually be number 12. However, we still have the biggest economy in the world. Now, what are the triggers that are going to cause this? This is right from the White House. China now faces up to a 245% tariff on imports to the United States as a result of its retaliatory actions. Now, look at the first one of these bullet points. More than 75 countries have already reached out to discuss new trade deals. And then another blurb from the White House. On the financial side, the reserve function of the dollar has caused persistent currency distortions and contributed, along with other countries' unfair barriers to trade, to unsustainable trade deficits. These trade deficits have decimated our manufacturing sector and many working-class families and their communities. And so this is one of the reasons that they want to shift monetary system, because no matter what they do with trade barriers and so on, as long as we have the reserve currency of the world, it means that we have to run these trade deficits. Other countries need the currency, and so we have to buy more stuff than we create. And so you put these two things together, and these are the triggers. Now, if there are more than 70 countries that want to strike a deal with us, do you really think that we're going to be taking all of these countries one by one and making deals with them, hoping that China is going to acquiesce and that we will strike a deal with them as well? I think that what is going to happen is we will have the Mar-a-Lago Accord or the Mar-a-Lago Agreement. So there will be another emergency economic conference to hash out a new world monetary system. So what does that mean as far as price targets? If you take the currency in circulation, if you go to the Federal Reserve's website, you get all of the data. The currency in circulation is $2,365 billion that are currency. The gold standard never backed M2 currency supply. So anybody that's giving you price predictions based on M2 is mostly bank credit. It's about 92% bank credit and only 8% currency in circulation. And so here you have $2,365 billion, and you've got to divide that into the gold reserves. By the way, this shows Federal Reserve, so you take this number and you divide it by that number, and you'll end up with the dollars per ounce. The 13 million ounces there at the Federal Reserve is part of that 261 million ounces that the U.S. owns.
While economically feasible, gold revaluation would require congressional approval, making it a politically complex process. Former President Trump has shown interest in auditing U.S. gold reserves at Fort Knox, a move likely necessary before any revaluation. The last full audit was in 1953, and recent curiosity from figures like Elon Musk highlights growing interest in this national asset. Though regulatory frameworks from past revaluations still exist, applying them today would demand rare bipartisan cooperation. MikeMaloney notes that a proper audit must include bar weights and purities. Much of Fort Knox's gold is considered lower purity coin melt bars from 1933, around 92% pure, far below today's 99.9% standard. A thorough audit would be key to uncovering the true state and potential value of U.S. gold holdings. Let's get back to the interview.
Just after President Trump was elected, massive gold inflows started coming into the United States. And then 2 months ago, he started talking about auditing Fort Knox, that we've got to go to Fort Knox and make sure the gold is really there. And so I want to show you, I use the Swiss gold exports because this is the major portion of but there's other sources of gold. It's just that they're very opaque. The Swiss gold exports, they do very accurate reporting, and so it's very transparent. So this is January of 2024, and what you're interested here, you can see China here is a big bar at 78.5 tons, and all the way over on the right is the United States with only 1.6 tons. And then we've got February at 1.6 tons, March at half a ton, April at half a ton, May at 0.7 tons, June at 1.4 tons, July at 7.9 tons, August at 0.6 tons, September at 6.2, October at 9.2, November at 5.9, and now you get to December. What happened to China? What happened to India? The rest of the world is being shut off from being able to buy gold from the Swiss refineries. 64.5 tons going to the United States. January of 2025, 193.4 tons, and the rest of the world has been turned off. China, 0.2 tons. and then February. And this is the last date of March numbers aren't out yet, but 146.8 tons, and still the rest of the world is shut off. Now, this is not retail investors. This is whales that are buying. The retail investors, this is U.S. Mint gold coin sales, down over the past 2 years. U.S. Mint silver coin sales, down. The Perth Mint gold coin and bar sales, down. Perth Mint silver coin and bar sales, down severely. And this is very disappointing to me. The mission of goldsilver.com is to save the middle class one investor at a time, and this is not the middle class that's in this. These are some super whales that are buying, and then people in the know in government that are front-running, and the U.S. government giving the Federal Reserve time to restock Fort Knox, the Denver Mint, and the West Point Mint with all of the bars of gold. And we will know if this has happened if we get a true audit that has bar purities on it. If you get the bar weights and the bar purities, Fort Knox was mostly full of coin melt bars from the gold nationalization of 1933. They melted down all of those coins, and so they're only 92%. They're not 999 fine. So these are the net gold imports and exports. So the U.S. is always a gold exporter. Remember that. But there are only 2 years since 1992. Well, there is that 1 year in the early 2000s where at 21 metric tons coming into the United States, but that's almost nothing. And then 2016 was 7 tons. But 697 tons coming in 2020 when everybody thought the world was going to end due to COVID. And then this year with 577 tons for January and February. This doesn't include March yet. And so when the March numbers hit, this is going to be the biggest gold inflows probably since World War II. Now, I want you to follow this trail of breadcrumbs and connect the dots and see what you think that this adds up to.
The swelling federal deficit and rising interest in a potential return to a gold-based system have reignited debates around gold's true value and role in the global financial structure. With ballooning debt, weakening confidence in fiat currencies, and record-breaking gold prices, central banks are responding by boosting reserves, signaling a strategic pivot. At the same time, renewed calls for transparency regarding national gold holdings underscore a broader push for accountability and fiscal responsibility. These developments reflect a shifting financial landscape, where traditional monetary policies are increasingly under scrutiny. In light of growing debt and central bank gold accumulation, could renewed interest in asset-backed currency systems reshape the foundation of global finance? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.